Hey there, it's Wayfair here, where delivery and setup are as easy as a few taps on your phone. You're relaxing in an old hammock, scrolling Wayfair's app, when you spot it, a brand new patio set. Next thing you know, Wayfair delivers it right to your patio and sets it up. Oh, you need a new grill too? All right, Wayfair's got you covered. With Wayfair's Room of Choice delivery and fast expert setup on qualifying orders, life gets a little easier. Visit wayfair.com or the Wayfair app.
Wayfair, every style, every home.
Welcome to Under One Roof MTL, where we are demystifying home ownership 1 week at a time. My name is Robin Flynn, joined as always by Fred Pichette and Martin Spalding of Fred and Martin Mortgages. Good afternoon, gentlemen.
Good afternoon, Robin.
Hi, Robin. I usually start with an anecdote about the weather,
Yes.
but I've given up, so we move on.
It was hot for a couple days, then it was cold. It just can't make up its
No.
mind.
No.
LJ Aguinaga of LJ Realties. How you doing, LJ?
I'm doing great, thanks. How are you doing?
Very well. Feeling so good. Why don't we give away some cookies? Everybody loves
Oof, love that.
Our trivia question this week brought to you by Felix and Norton Cookies. You can visit their store at the Blue Haven Shopping Center, 3705 St. John's Boulevard in DDO. The first person to text in the correct response to 514-790-0800 will receive cookies from Felix and Norton delivered straight to their door. Our question this week: what is the word for the amount of money you've built up in your home as its value increases and your mortgage decreases? What is that word? 514-790-0800 if you think you know it. Lots in the news this week. Bank of Canada shockingly chose to hold interest rates this week. Of course, I'm dripping with sarcasm here. We all predicted that they would hold interest rates. So let's just quickly go around reactions to this decision.
Well, it was the worst kept secret in town, right? We've been talking about it for the last month. Bank of Canada, wait and see mode, not ready to cut, not ready to hike. Good news for variable rate holders, not so good news for fixed rates, because the fixed rates are influenced by the bond market, and the bond market is getting hammered these days because of oil prices, inflation concerns, and general global uncertainty. So the play right now is to go variable. I can't believe I just said that.
Wow.
But let's take a step
Be
back.
happy, like you've brought him to the dark side.
Oh, I know. Full circle. Full conversion.
Now, again, we want to be clear that if you're currently a fixed rate holder, there is no impact to you, right? Your rate is fixed. There's absolutely no change happening to you right now. But if you are going out to shop right now, we're starting to see a very large delta between the variable rate and the fixed rate. And that's why Martin's leaning a little bit more on that side than he ever has before.
Ever.
Well, also, I'm the variable guy here, but guys, if inflation is not under control, we might have some rate hike this year, because we're probably going to reach 3% inflation rate or even more
I can't
this month.
believe Fred just said that.
Yeah,
Fred
well.
is the most optimistic of the three of us, or the four of us, and he just said rate hike.
Yikes.
Yeah, well, it's a possibility. I read it, and it makes a lot of sense. But in the meantime, it says if inflation is under control and economy is bouncing back a little bit more, then we may have a rate cut later on. But it's a possibility that at the next announcement on June 10th from the Bank of Canada, that they may be at the temptation of raising the prime rate of Canada. Maybe, I'd say.
Those oil prices are just out of control. You had the federal government announce that they were cutting that tax to give users, customers, consumers a bit of a break, but I didn't notice prices go down. In fact, prices jumped this week on Thursday. They were $1.85 in the Montreal area, and it was up to $2.02 by Friday. I was in Ottawa on Thursday. Typically, gas is about 20 cents cheaper per liter in Ottawa, and it was $1.76. So it was only 5 cents cheaper than it was in Montreal at the time. So it is just so expensive. People are choosing to walk and take the metro. Like, gas is just out of control right now.
Yeah, I tanked up yesterday, and it was scary. It was well over $2.
Wow. So people are being hammered at the pump. We're watching those fixed rates creep up, and apparently mortgage debt is rising the fastest amongst Canadians who are approaching retirement. Typically, these are the folks who are paying down their mortgage. You want to go into retirement without a mortgage, ideally, but the latest data is showing that older homeowners are increasingly leveraging their own equity to help younger buyers. So, this is potentially taking some equity out of your home to help your adult children purchase a home. This increases your financial risk, right, Martin?
Well, let's break this down. So, Canadians near retirement are taking on more debt, rising about 6% in 2025. That's the fastest growth of any age group.
Oh.
The bank of mom and dad is a major driver. More parents are borrowing against their homes to help their kids buy. About 41% of first-time homebuyers receive family help, averaging close to $80,000. Fred and I see this in our practice all the time. More retirees will still have a mortgage payment. 29% of Canadians near or in retirement expect to be still paying their mortgage on their home. Mortgage debt is not disappearing. It is actually increasingly being carried by the older generations. Cash flow, because of everything you just mentioned, Robin, is the real issue. Older homeowners are refinancing, extending amortization, or using reverse mortgages to lower their monthly payments. Debt in retirement is tougher to manage when costs are rising and income is fixed or reduced. More seniors are continuing to work. About 15% of Canadians over 65 are still working. And if we circle back, because I know you're going to ask the question, the bank of mom and dad, the big question is, before pulling any equity out of your home, you need to ask yourself, because your kids have more runway than you do, will I still be able to retire if I help out my kids?
Yeah, that's an important question. It's tough though, because I guess if you're looking at your adult children who are, let's say, about 30 and they've gone to school and they're paying student loans and they still can't save up that down payment, you want them to get into a property. You want to sort of help them get started, but I guess not if it means hurting your own
Well,
finances.
I,
Wow.
I think there's another side of this coin, to be honest. I think one of the biggest drivers, obviously wanting to help is one thing, but one of the reasons why I've seen a lot of parents step in, and as a millennial myself, I'm working with kind of millennials who are buying maybe their forever home or kind of getting into the step up homes and might need a little bit more help at this point in time, just given the prices on the island ultimately. The grandparents, quote unquote, because my generation has all started having kids now, want to have this proximity to the grandkids. And they recognize that if they want to keep the grandkids within 15, 20 minutes away from where they currently live, it's really expensive to do that. And they're going to have to step in to help a little bit in order to make that a reality. Because if not, inevitably, they're going to find themselves in traffic going to babysit, going to see the kids, going to, if they really want to have a relationship, obviously. So I'd say more than anything else, they're stepping in because of the grandkids are the leverage point here in order to keep people close by.
Yep.
A-
Yeah,
a-
but
and I and I love to say that you better help your kid when you're alive than when you're past, because it makes sense to help your kids nowadays, especially with price are rising in the mortgage in the real estate business.
yeah, but there's helping your kids, and then there are limits to that because you don't ultimately have to have your kids help you because you've run out of runway, you run out of cash to support your retirement. So you just got to be very strategic about those decisions about pulling equity out of your house and helping your kids.
Yeah, but sometimes, Martin, it's just a little kick, a little, I don't know, 20,000, 25,000 that makes a difference for them to help them to accumulate that down payment. It's if you're not co-signing the mortgage for them, I know it's still money, but a little help for the down
Yeah,
payment.
but the article says 80 grand. So I'm sort of sitting there going, who's got 80 grand to spare to help their kids get into a home? 5% down is more than enough. So if you can lend them 5% on say a $500,000 home, that's 25,000. That's not 80,000.
But we
So
got to take a step back here, Martin, because that $500,000 home isn't the one in the core Montreal area anymore, right? The people who are sitting on the equity, who are sitting on $1 million or $1.5 million worth of equity, are people who are living close to the city more than likely, and that's where these numbers are shifting ultimately. Because yes, you can totally buy a property in the West Island, but even in the West Island, to find anything under 650 is very uncommon, and even that is really closer to 850, even 900 is becoming quite common practice for a home that is in nice condition, it's been renovated, etc., but isn't particularly big by any means. So the 80,000 gift, I believe, is really a lot more aligned with whether it's down payment, whether it's repairs to the home, whether it's welcome tax, which is also out of control in certain neighborhoods. Think we're seeing a lot more of that. And again, obviously, if that's all you have, then you don't have 80 grand to lend. But some families who are sitting on that $1 million worth of equity to pull out 80 grand to give to their kids to get them into this next chapter of life, it's become common practice.
Yeah, I'm not saying not to gift. What I'm saying is that you retire at 65, you live till you're 90. That's 25 years. Just make sure you still got enough to make it to 90 because you don't want to turn at 85 and say, we're running out, mom and dad is running out of money. Kids, can you give us a hand? And you don't want to burden your kids. You want to help your kids. You don't want to burden your kids. So I think we're all in agreement. I think you just got to be wise and strategic as to what you're doing.
And maybe be okay with sitting in traffic. Kids move to the South Shore, Laval, up into the Laurentians, somewhere that they can afford that cheaper 5% down payment. Go for a nice little road trip to visit the grandkids.
Or Chateauguay.
Or Chateauguay. Lovely Chateauguay. Although the prices are starting to boom in Chateauguay, so as we've seen lately. Still to come, we've got a recent LJ Realty's client who wants to talk about what their experience was like working with LJ and his team. That's coming up after we check traffic at the CJD 800 Traffic Center. This is Under One Roof MTL. I'm Robin. That's Fred. That's Martin. That is LJ. We're with you until 1 p.m. It's time now to take you on a little journey, the seller's journey. What can you actually expect when you decide to sell your home and you decide to work with LJ Realties, LJ and his team to sell your home? Well, who better to talk about it than somebody who recently sold their home with LJ Realties? Me. I recently listed my home in Chateauguay, and obviously I chose to work with LJ Realties, and I have nothing but positive things to say about the experience. I've never been the seller of a home. I've been the buyer of a home, but it was my first time being a seller, which can be a little bit nerve-wracking. You don't know what to expect. You don't know what you need to do. And I have to say, LJ, from the get-go, when I called you and was like, I'm ready to go, we're selling this house, what do I need to do? I think you met with me within 2 minutes. Like we started talking right away about what needed to be done. So, what goes through your mind when somebody calls you and says, LJ, I want to sell my home, I want to move quick, and I want to work with you?
The first thing I always ask why. And the reason for this, I always want to understand they're making the right decision because we all go through good days and bad days. We all kind of sometimes make decisions on the fly. So I always want to make sure what's really the motivator and the driver behind the decision. And once you come to terms that, this is definitely the right move for you, because if you can keep the home or if we can keep whatever the asset is, and that makes more sense, I'm going to do that. But once we've gotten past that and we're like, no, yeah, selling this property makes sense for you where you're at right now. Fantastic. Then we go into our systems, right? We have all of our checklists. We sent, I sent you an email on what we would need in order to get the listing started. We sent you an email that had a PDF document with how to prepare your home for photos. We had a couple of videos on there on how to prepare again your home for photos and video with kind of step-by-step instructions as to what we expect for video day and photo day, pardon me. And after that, we got to work. We put the whole listing together. You sent over the documentation. We got started working on the copy, and then we did our marketing blast. Like usual, we took the property to market on a Monday, and we marketed all week. We did the open house on Sunday. I think we had 13, 14 visitors on the open house. It was pretty busy, lots of good activity. And then following on that, we continued to have a really good stream of visitors coming by for the next 2 weeks until we finally got that solid offer that we move forward on. So that's kind of the steps that we like to go through.
Yeah, I like to. Everybody's asking me how it was like working with your team, and I say my house was on the market for 16 days when we had an accepted offer. 16 days, which is much lower than the average that you see in the greater Montreal area. So, we were very pleased because we wanted to move quickly in our case. So that was nice to see. I was very impressed by the seller's consultation. So you met with me and David, my husband, to determine how we're going to price the house. So you were able to pull up the listing from when we bought our house 7 years ago to see what we paid, what was included, what wasn't. We were able to go over inclusions and exclusions with you, find old documents, invoices, warranties. Thank goodness I'm so organized. And I had a lot of these things at the ready. But that process was incredible. What went into sort of fine tuning that seller's consultation?
Honestly, just years of experience at this point. It sounds silly, but just having done it as many times as I have at this point, we like to get you prepared as much as possible, but ultimately technologies has helped us in order to be able to do these things remotely. We used to sometimes come in person, you weren't ready, we didn't have everything. But now with a shared screen, whether we do it in person or online, we can go through the seller's declaration entirely together. I usually let the sellers give one run at it first, and then we review it all together because I'll ask very pointed questions as, hey, you declared this, but I think that maybe it's something else. We went through that. We talked about cracks. We talked about all sorts of different things at the home, condensation on windows, which is super popular, maybe some insulation, the electrical panel, all that good stuff. And once we had a solid version of it, we were ready to go to market ultimately. So yeah.
Yeah. The most difficult part of the process for us was decluttering. But what we managed to do is before I even came to you, we rented a storage unit, moved a bunch of things into storage so that we were pre-decluttered for you. But I guess typically when you're working with sellers, you have to have that conversation about reducing the contents of their home.
Look, it's usually the number one thing we have to do. Decluttering is 99% of the time something we're going to have to do on a property. The reality is we all accumulate a lot more stuff than we actually need. And because of that, it ends up living in our homes, and it's all over the place, right? So when a home is decluttered and it feels spacious and free and it's really breathing well, people have a much easier time envisioning themselves in the property. And that's ultimately what's going to lead to getting the best offer in the shortest amount of time for the sellers.
There's also visits for potential buyers. My advice, after having been through this process, would be to board your pets. Find somebody who can take your animals for a few weeks because that is probably the most annoying part, I guess, is getting those animals in and out of the house. I think we had Amanda who is on your team who was working with us as our broker, and she would send me photos all the time from the house before a visit of my cat in the window. He had gotten out somehow and was trying to get back in the house. So pets are a very tricky part of the equation.
100% pets. And again, some are super easy going and it's great, but pets are always a big question mark because some buyers are allergic to pets. And it even happened in our case. We had one buyer who was coming by who either had a phobia or was allergic or a mix of the two to the
Yeah.
cat ultimately. And the cat was originally out, and the cat said, "This is my home," and came into that home when the buyers were coming in. And that caused a little bit of friction. So, yeah, if we have a clear understanding of what we can do with the pets, obviously, to help mitigate that, it's always best. But more times than not, it is fine that they hang around there. A lot of times they just want to hide and do their own thing.
In my case, my cat is overly friendly and wants to be best friends with everybody, so he doesn't hide. But we made it work. We also have a young child. My daughter is 4, so we tried to declutter her toys as much as possible. But you don't have to completely remove all evidence that a child exists in the home, right?
Of course, like it's a single family home. Most people are coming in to bring kids into the home. So having some toys and having like a cute little kid's bedroom and a kid's corner downstairs, all that stuff is very normal and fantastic to really showcase the potential and how the home is meant to live. But obviously, we want it to be organized and decluttered and kind of manicured almost.
Yeah. The actual process was great too, from when we decided we were going to list to when we were able to book that appointment with the photographer who came in and took photos of the interior and exterior of the house. On that same day, you had your social media manager coming to film videos, to create, beautiful reels for LJ Realties on Instagram so we could showcase the property. And then I was so impressed by this after the open house, when we came back into the home, you had created these gorgeous booklets that showcased all the photos of the home, had all of the relevant specs. I think that is so cool for the buyer coming in to just grab that booklet and you've got it all there that you can refer back to it. I thought that was really cool.
Thank you so much. That booklet is honestly so useful because any buyer who comes through a home that is at all or remotely interested in the property takes that booklet with them. Inevitably, it ends up on their coffee table, on their kitchen counter, on something of that nature. And then for the next couple of days, subconsciously, they walk past wherever they're living and that document is there. That paper's there. Oh, let me take a look at the photos again. Let me take a look at the dimensions. Let me look at the taxes. Let me see the description again. And it's kind of living in their head rent free, whether you like it or not, making sure that they're thinking about the home and kind of pushing them forward if they already make a decision on it.
What kind of made you guys stand out, you and Amanda and your whole team truly, was the communication. There was a group chat created with me and David and you guys. So anytime there was a visit, we would receive the feedback from the potential buyer of what they did and didn't like. Most of the times, the things that they didn't like were beyond our control, like didn't like that there wasn't a separate dining room. We had an eat in kitchen, for example. I can't suddenly add a dining room, but it's nice to have that feedback in case there is something within your control that you can address. And it was great to hear as well that when the person who ended up putting the offer in on our house was here, as he was walking around viewing the house, we were told he was going, "Oh, I could put my microwave here. I'm going to put my bed over here." As soon as I heard that, I was like, he's putting in an offer. He's already envisioning himself in this house. And sure enough, he put in an offer. We accepted the offer within our desired price range with our preferred closing dates. We went to notary last week and the house is sold. It was such a fast process, LJ. Honestly, thank you and Amanda so much.
Thank you so much for giving us the opportunity to work with you. And again, these are the stories we love to hear. This is exactly what got us into the business and what keeps us around and keeps us fulfilled every single day. So thank you so much.
Absolutely. If you're not sure if now is the right time to sell your home and you're on the fence about who you should work with, I cannot recommend LJ Realties more. They're an absolute pleasure to work with. You can give them a call, 514-500-4040, and they will walk you through the entire process. Coming up, is it always a good idea to pay down your mortgage early? Fred and Martin will have the answer for you after the news. This is Under One Roof MTL on CJD 800. My name is Robin Flynn with Fred Pichette and Martin Spalding of Fred and Martin Mortgages, LJ Aguinaga of LJ Realties. Paying down your mortgage early sounds like a great idea in theory, but it does come with trade-offs. So, Fred, Martin, you are somebody who's had your mortgage for a while and you've got some extra cash and you're thinking, you know what? Maybe I should pay down my mortgage a little bit faster. Is that something that you should be trying to do?
Well, most people would say yes. Less mortgage debt means less interest, more equity, and the peace of mind that comes with owning more of your home.
Well, why would somebody want to pay down their mortgage faster?
Well, great question. There are a few good reasons why homeowners want to accelerate their mortgage repayment. First, as mentioned, you reduce the amount of interest paid over time. Second, it gives you that financial security. Being mortgage free for many is still a life goal. Third, as people get closer to retirement, they often want to lower their monthly obligations, especially if their income is going down or is it going to be fixed. But there are trade-offs. Paying down the mortgage will reduce the interest paid, but also reduces the amount of liquidity you may have. It'll limit your flexibility and it may trigger lender scrutiny. I'll explain that. An example, a borrower has a mortgage balance of $280,000. The borrower's father offers to lend $200,000 to reduce the mortgage before its renewal. On paper, seems great. The mortgage balance drops, you'd think the lender would be happy because their exposure goes down. But the lender decides to decline, for now, the request. They want to know, where does the money come from? And is it really a gift or is it a loan? So there's a big difference between gift and loan. There are major differences between the two. A true gift from a family member is generally accepted, provided it is properly documented. The lender will want to see a signed gift letter confirming the money does not have to be paid back, plus proof of the provenance of that money, especially a gift of $200,000 on a mortgage of $280,000. A family loan is very different. It is a debt and could impact the borrower's liabilities. So the famous debt to income ratios, the famous debt ratios, the GDS and the TDS. And so it could impact the qualification because what's really happening is the borrower or the person receiving the gift is replacing one debt with another. So what really has to be defined, is it really a gift or is it a loan? And that's where the lenders go, wait a minute. If it's not a gift and it's actually a loan, it becomes a liability and you're just shifting the debt from one person to another.
Okay, that makes a lot of sense. What about prepayment privileges? So typically you are allowed to make prepayments on your mortgage, but isn't there usually a max amount or a cap for how much you're allowed to pay each year?
Well, most bank and lender has a limit to the prepayment that you could do. Some of the lender allowed up to 10, 15, or 20% from the original amount per year. Like technically, you could put a lump sum every year up to, normally most of the bank will go up to 15%, but you could also double your payment. And that's something that a lot of people ask, but not too many people actually do. They want to have that privilege, but it's hard to keep up nowadays with the mortgage payment and interest rate at around 4 or 5%. But that's vary between lenders and banks.
Okay, and that would come with liquidity trade-offs, as you kind of already alluded to, Martin. If you're making these extra payments, lump sum payments every year, or those double payments, that means that you have less money for other things in a time where we've talked about inflation is so high.
Yeah, I'll give you an example. I was having a conversation with a friend of mine who could probably afford to pay off his mortgage right now. And he said, I spoke to my financial advisor, and right now I'm making 15, 20 points in the market. So if I pull that money out of the market to pay down my mortgage, is that the best use of the money? And also, you don't want to get into a situation where you've heard us say this numerous times, where you become equity rich but cash poor. So yeah, you don't have a mortgage, but you have no savings. So if there's an emergency, or you need to do some renovations, or you want to help out your kids, you've now tied up your money in your home. So to access that money, what you need to do is refinance your home. So again, it's one of these things that you really have to think about what you're doing. And is it worth paying down your mortgage too aggressively because you want to be mortgage free if you're exposing yourself to having no liquidity left for when life happens?
Yep.
Well, let me give you an example here. Take a 400,000 mortgage at 4% on 25 years amortization. Technically, your regular payment is about 2,100 a month. Now, if you add just the 200 more every month directly to your principal, that is less than a daily coffee or lunch out. The result of doing that is you save more than 3.5 years of mortgage payment and approximately 36,000 of interest, which is a little 200 a month as a real effect on your mortgage. And I often get that question, Fred, should I pay my mortgage faster or should I invest money, as Martin says? Well, I think that the answer usually, if back in the days, I bring you back to 2021 when the people had rates less than 2%. Why you were in a hurry to pay down your mortgage faster when you have an interest rate at 1.79? Obviously, it makes a lot of sense to do that because you will even reduce your interest rate that you pay. But sometimes you're better off contributing to your retirement plan because, as Martin says, your house may be paid with no mortgage, but you could be house poor because you don't have any savings aside, which is usually just, I would say, paying a little more than what your contract says really helps, but paying everything, every saving that you have towards your mortgage is maybe not the right things to do either.
So let's recap some practical advice for borrowers who are thinking about paying down their mortgage earlier.
All right. So we identified six. So number one, do not move large sums of money without speaking to your mortgage broker or lender first, especially when you're going through the qualification process. Wait till you get approved, then start shifting your money around. Number two, be very clear whether family money is a gift or a loan. Do not call it a gift if there's an expectation that you'll have to repay it. Number three, if it's a gift, expect paperwork. You will likely need a signed gift letter, which will be provided by the lender that you're working with, and proof of the source of the funds, the provenance of the funds. Number four, if it's a loan, understand that it may affect your qualification even if the loan comes from a family member. Number five, look at timing. Sometimes makes more sense to wait until renewal, refinance properly, or structure the payment within the lender's prepayment rules. Like Fred says, maybe just 200 a month more is a lot more reasonable than really stretching yourself out and going through all your savings to get rid of your mortgage. Number six, keep some liquidity because mortgage free is great, but being house rich and cash poor can create some unneeded stress.
Absolutely. Great advice there. If you want to find out more about what your options are, thinking about paying down your mortgage faster, want to maybe shave a few years off the end of your mortgage, get in touch with Fred and Martin. You can visit their website at fredandmartin.com. Coming up, our property of the week plus the answer to our trivia question of the week. That's coming up after we check traffic at the CJD 800 Traffic Center. Wrapping up on Under One Roof MTL, my name's Robin with Fred, Martin, and LJ. It's time now for our property of the week. Where are you taking us this week, LJ?
If you're ready to stop renting, 7421 Avenue des Halles in Anjou is a clean, move-in ready one-bedroom condo on the 4th floor with hardwood floors, a private balcony, in-unit laundry, indoor garage parking, and a walk-in closet. Everything you need, nothing you don't. Price at just $299,000. Call Nanny at LJ Realties to book your visit. LJ Realties, trusted local results. And if you're looking for a snack in the area, I'd go to Homer's Donuts. They are absolutely delicious. It is literally a short walk away. You should probably walk home after the donut anyways. And then if not, we've got Galerie d'Anjou with La Belle Labeuf and a bunch of other great options also just a stone throws away.
Yeah, those
Actually,
donuts
LJ,
at Homer's are huge. Like you could easily share that between two people.
Size of my face.
I'm actually looking at the pictures on the listing, and for $299,000, you're getting a lot of apartment.
100%. Plus, you're close to the metro. You got accessibility. You name it, it's there.
A lot of people say that you can't get anything on island for under 300,000. Here's a perfect example of something that could be a great starter place.
100%. And we're hosting an open house today from 1 to 3 p.m. So right as we log off, next couple of minutes, if you head on over there, we've got Nanny Yunzi who will be there until 3 p.m.
Excellent. I will say Nanyunzi was the one who was at my house when we sold our house. She was filling in for Amanda. So she's good luck. You definitely want to work with her.
She's definitely good luck. She's done that a couple of times now.
The answer to our trivia question of the week, shall we, gentlemen? Brought to you by Felix and Norton. Our question this week was, what is the word for the amount of money you've built up in your home as its value increases and your mortgage decreases? The answer is equity, home equity. So congratulations to Sally in Beaconsfield. She's getting some cookies from Felix and Norton delivered straight to her door. Gentlemen, that pretty much does it for us for this week. If you want to ask anybody a question at any point, you'll have the answer featured right here on this show. You can email us at underoneroofmtl@gmail.com. You can also reach out to LJ, Fred, and Martin individually when you want that one-on-one personalized advice. So LJ, where do people go to reach you?
Again, the best way to meet me is go to my website, meetwithlj.com. Very easy. You can book a meeting with me. We can either hop on a phone call, Zoom meeting, in person, you name it, we'll do it. If not, if you want more information on what we're up to, check out our website, ljrealties.com, or on our socials with the handle LJ Aguinaga. That's LJAGUINAGA. I do get a couple callers who reach out to me with some of their questions, and I always love fielding them. You can also check out the handle LJ Realties on all socials, or you can call or text me at 514-500-4040. As always, if you own some property and you're just a little bit tired, maybe frustrated, or even fed up of having to manage them because you've had a couple difficult tenants, or just, you know what, you rather focus on spending time with your grandkids or whatever it might be, reach out to our other property management company, Plex Doctor, and Lawes will take over to give you back your time. You can find us at plexdr.com, or you can call Thierry directly at 514-709-6397.
Excellent. Fred, Martin, where do people go to get in touch with you?
You mean your grandkids that live next door because you gifted them enough money so they could buy a property next to yours? Those grandkids?
100%.
It's funny that you mentioned frequently asked questions, because that's what we're going to be talking about next week. So stay with us. If you've got any questions, we already get, during the day, we answer questions all day long. And we feel that on a sort of monthly basis, it's good to answer some of those questions on the air. So next week, we're going to be answering some of your frequently asked questions. So if you want to get in touch with us, the best way is through the website. Our phone numbers are there. So when you call Fred or you call Martin, actually Fred and Martin answer the phone. And when you write to us, whether it's Fred or Martin answer you directly. There are no intermediaries. So the best way is to go through our website, fredmartin.com, and
fredandmartin.com. And I'm very happy to answer a question. I get some calls And sometimes people think that it's a stupid question, but there's not such thing as a stupid question, you know. Like you want to know a little tips or an advice, feel free to reach out to us. I even had one last week saying, Fred, you think it's a good rate that my bank offering me? Well, I says it is an aggressive rate, but I could do a little bit better. But honestly, you know, I love to answer those questions, you know, and I'm happy, more than happy to guide you.
Excellent. If you missed anything, you can listen to the show in its entirety on iHeartRadio, Spotify, Apple, wherever you get your podcasts. For LJ, Fred, and Martin, I'm Robin. Have a wonderful Sunday.